What's going on, guys? It's K-Dub here with another episode of CryptoZombie. Welcome back to the channel. Hope you're having an awesome day today. Bitcoin and cryptocurrencies are, for the most part, in the green today. Bitcoin has sort of recovered from that dip we had yesterday, although we're still kind of bouncing around in the same area. Now, we have a look at the weekly chart, and we can see that this has been one of the most boring weeks that we have seen for Bitcoin. We pretty much opened exactly at these levels 7 days ago, but don't get too bored because we have a big monthly close coming up in less than 24 hours and things could start getting exciting relatively soon. So I do want to talk about that. Also want to discuss the fact that we have over half of the Bitcoin in circulation not being moved in 1 year. Now, what does this mean? Is it just the hodlers are being stubborn? Have people forgotten about it? Have they lost their Bitcoin? Or does it actually mean something else? Well, I want to actually show you guys something about our good old friends, the institutional investors. I know you're always so excited when we talk about the institutions, but if we actually have a look at the data, we can see that institutions have been betting big on Bitcoin. They have been accumulating. Some might even argue they've been leading the way. And for everyone who thinks that Bitcoin is too boring right now, I'm going to let you know why. This might be one of the last opportunities to get Bitcoin this cheap, because once this rocket starts, well, it's pretty much not turning back. Now, I know we've heard that before, so stick around. We'll talk about it. I can hear the skepticism already. Do want to talk about that. Also have some Polkadot updates, and I do want to discuss the fact that we have central bank digital currencies looking like they could be playing a big role in the future of the global economy. Now, what does this mean for the US dollar? What does it mean for Bitcoin? And of course, most importantly, what does it mean for your privacy? So these are all things we're going to talk about today. If that sounds good to you, smash the like button, get subscribed, or just drop a comment. I like comments as well. Also, every comment dropped does enter you for a chance to win a Ledger Nano S. So without further ado, let's get into the very, very boring Bitcoin chart. You can see if I zoom in right here, we're basically putting in a sort of just doji candle. I mean, Bitcoin opened this week. I'll tell you what we opened. We opened at 10,779, and we are currently at 10,766. So a very boring week for Bitcoin. We're still sort of hanging around no man's land, right? We're looking to either break into this blue zone up here. We need to get above the $11,000 level, or to get a little bit more bearish, fall below the $10,232 level. Right now, we're still kind of just hanging around. Now, having a look at futures, we do notice that we are being held down still by this center trend. We have not been able to break to the top of the asymmetrical triangle. If we did have a breakout to the upside, I would expect Bitcoin to go to $11,400. If we have a break to the lower side, we could be retesting the lower 10,000s. However, we are literally, as I'm making this video, we are sitting right there, right on that level that we need to beat, which is the $10,761 level. And that is the reason we need to close above that level is because right here, that's where we closed when Bitcoin hit its peak in June of last year when we got to 14,000. But keep in mind, we didn't close at that level, right? So that's why this level right here is extremely important, and Bitcoin is literally sitting at that level right now. So the next 24 hours, although they're boring right now, they could get very interesting very quickly. Now, we need to talk about a few Bitcoin fundamentals. Number one is the fact that we have supply shock. Over half of Bitcoin in circulation has been dormant for a year or more. In fact, here's an interesting statistic. Anyone holding Bitcoin for just about any point of its life, aside from a short-lived stint in 2019 and a month or two in 2017, would have substantial ROI to show for it. In fact, if we have a look at this chart that Calendar Profit pointed out, as of today, buying Bitcoin has been profitable for 93.8% of all of its days since 2013, April 28th. Now think about that. Think about that. What other altcoin can you honestly say that has been profitable for 93.8% of its time? For the most part, you got to kind of get in at the right time. Right now, I know if you bought Bitcoin recently, you might be saying, hey, I'm down a little bit, but we know historically that Bitcoin always proves to be a good investment. Now, 44% of the total supply has been held in wallets since September 2018 or earlier, meaning that they held through the worst of the bear market. They didn't sell the bottom. They didn't sell Black Thursday either. And that data suggests that more than a quarter of the Bitcoin supply has been sitting since September 2017, missing even the peak at the top, as well as the entire bear market as well. So what is going on with this? Well, some people may say, hey, some of it might got lost. Maybe it was during the Silk Road days when people, were not really paying attention to the price of Bitcoin, or some people didn't think that Bitcoin would, become as big as it was. Maybe they threw out their old hard drives or computers, right? But whatever the reason may be, almost 2/3 of the supply has not moved in a year or more, while another nearly third hasn't moved in 3 years. What's also interesting is the fact that on top of this, you may be saying, well, people are getting bored, they've forgotten about it. Well, that's not true, because Bitcoin just set an all-time high on its 180-day moving average for activity on addresses, which suggests that the remaining 39% of Bitcoin that is circulating freely is doing so at the highest rate ever. So not only are we seeing massive Bitcoin addresses, we're seeing lots of Bitcoin activity, but we're also seeing some of the highest rates of Bitcoin hodling we have ever seen. So what does this tell you? Well, if we have a lot of activity on Bitcoin as far as the addresses and the network is concerned, but we're not seeing a lot of people sell their Bitcoin, this might suggest that we have a lot of Bitcoin interest. So let's talk about the institutions right now. According to a report published by derivatives trading platform Zuber, open interest on the Chicago Mercantile Exchange and other regulated exchanges has remained consistently higher in comparison to their traded volumes, indicating that institutional investors are looking at Bitcoin for the long term. So could it be possible that some of these Bitcoin whale wallet addresses that have been accumulating during the ups, the downs, are they truly hodling and stacking up and hoarding their Bitcoin because they know something that we don't? Well, we know that Bitcoin price is going to the moon, right? They know that, we know that, we all know that. If you don't think that, then I don't know why you're watching this channel, but let's get a little bit grounded and let's stick to the data for now. Per Zuber's report, the correlation of traded volume is similar on unregulated trading platforms, but differs significantly on regulated Bitcoin products, confirming a long-term bias of institutional investors. On leading spot exchange Binance, the open interest to volume ratio shows traders close their positions a lot faster than on regulated platforms where institutional investors are trading. The ratio has actually increased for institutional investors, more open interest compared to trading volume on regulated platforms like Bakkt and CME, while retail-geared crypto trading platforms have remained relatively stagnant. CME traders have led the pack, keeping their positions open even during the bear market seen earlier this year. Even during the so-called Black Thursday, Bakkt and CME traders have the highest levels of open interest in comparison to the traded volume. So could it possibly be that these guys are stacking up right now? And could it be potentially one of the last opportunities to really get Bitcoin at these prices? Because I have a hunch that once we do break that $20,000 psychological level of all-time high, I think we are going to blow our way past 20K to 30K, 40K, even 55K, like I had actually mentioned a year ago, but obviously due to the pandemic, things got a little bit crazy. But I think had we not had that, we would have already broken the all-time high, and I think we could have potentially even seen that $50,000 Bitcoin by right now. Now, tell me if I'm wrong. If you guys disagree, that's fine. But look, I'm not complaining, okay? I'm in no rush. I'm happy to accumulate Bitcoin at these prices, all right? Also, before we move on, I just got to give a massive shout out to my buddies over at IoTex. Congratulations. So they finally had the camera, the UCam, is now actually available on Amazon. I think this is not only good for them, I think it's amazing for just the blockchain and crypto space in general, because now we have a product actually over on Amazon that you can get right now, and it's really creating that validity for the blockchain space. Actually, where is my camera? My camera's over here. I still got to get mine set up yet, but this is mine right here. It's got a little antenna. So yeah, they gave me one of the earlier ones. Shout out to those guys. But yeah, now everyone can get their hands on it. And you know, it kind of reminds me of the importance of owning your own data, right? Your own data as well as your own money. And, you know, interestingly enough, when you actually think about, you know, people say, oh, well, can't Bitcoin get hacked? I just want to share some quick data facts real quick. So this is actually the odds of winning Powerball versus guessing one Bitcoin private key. So you can see right here, the odds of winning Powerball are actually relatively high, whereas guessing any private key with a balance is, I can't even say that number. That number is literally too big for me to even say. However, to break it down, you would have to win the Powerball 9 times in a row in order to equate to the odds of being able to crack a Bitcoin private key. So I think your money's safe. Most of these guys, when they get hacked, it's because they leaked their information. Someone got a hold of their private keys because they mismanaged it, right? They copied and pasted it. They saved it on their computer, okay? But if you have something like a Ledger Nano S or something like that, you are very safe. But here's a funny little thing from Obi-Wan Kenobi. He says the Federal Reserve knows your USD seed phrase. They've been siphoning off your wealth for years. They just call it rebasing, but you've been exit scammed. Check your wallet. Consumer price index for all urban consumers, purchasing power of the consumer dollar in the US city average. Look at that chart and tell me that you're not even remotely concerned, number one, for the US dollar, but, you know, I mean, obviously this is why we invest in Bitcoin, right? So that's my little spiel on Bitcoin fundamentals, and, you know, we always have to have that little positivity, but also talking about one of the ecosystem projects I've been quite excited for. You guys know it's Polkadot. I know, K-Dub, stop shilling Polkadot. You talk about Polkadot too much. Okay, fine. Maybe I'll chill on the Polkadot, but you guys know I am a fan of it, right? And I wanted to point out we have another project. We have Refinance. They decided that they're going to launch on Polkadot as well, and they do discuss some of the limitations of the DeFi that we have seen on Ethereum. Obviously, we still have gas prices a lot lower now. I was on Uniswap just yesterday, and the prices are a little bit lower. I will say that's a good thing. But you know what happens when we have the next big frenzy again, right? We're going to have $50 gas prices again. Well, now we have Polkadot-based Refinance. They have closed a 3.9 million seed fund. They do have guys like NGC Ventures, QCP Capital, Kinetic Capital, Woodstock Fund, AU21, etc. And the CEO of Reef said, you know, the average retail investor entering the DeFi landscape is actually confused. They don't know the names of the projects or how to keep up with the best strategies and stay safe and well diversified. They have to go through like 5 different websites, use all these different interfaces made by different vendors. It's overwhelming, and while they're trying to figure out how to do this, they are missing out on multiple different opportunities. And that's exactly what these guys are trying to solve. To remove the headache from a typical DeFi user experience, they offer a one-stop shop combining a global liquidity aggregator, yield farming aggregator, and asset management product. And yes, my friends, they are choosing Polkadot. And I've noticed a lot of projects now either moving over to or actually just deciding to build on the Polkadot infrastructure, you know, because of its interoperability. It's extremely fast. It has its parachains, right? So just wanted to kind of point that out. But we were talking earlier about privacy when we were talking about, you know, your own data and stuff like that. And check this out. On Wednesday, the IRS awarded 2 $625,000 contracts looking for tracing tools for privacy token Monero and layer 2 protocols. The winners were blockchain analytics firms Chainalysis and Integra FEC. So here's basically what I'm trying to tell you guys. If you're looking to do nefarious, illegal activities utilizing blockchain, well, you've come to the wrong place, because they are going to be able to trace you. Eventually, they may be able to actually crack the code on Monero. So funny, it still kind of ends up that cash is still technically the best way to do illegal things, even though, you know, they like to deny that cash is used for money laundering, but really it's used way more for money laundering than cryptocurrency. Cryptocurrency is traceable. Don't do stupid things with cryptocurrency. Okay? Public service announcement to all of you guys. And also, speaking about our good old buddy, the US dollar, we do have geopolitical jostling accelerated by large-scale private stablecoin initiatives like Libra, plus an added dose of the pandemic, which means we are now facing a perfect storm for central bank digital currencies, which means all of your transactions will be monitored. They'll probably be able to turn off your wallet if they don't like what you're doing with your money. So at the end of the day, granted, yes, Bitcoin is traceable. No, it is not private. At the same time, at least you still do control your funds and no one can actually shut them down. And that, my friends, is the beauty of Bitcoin and cryptocurrencies. So thank you so much again for coming back to the channel. You guys rock. You are the reason that I do this every single day. I know today's video came out slightly later than usual, but hey, better late than never, right? Thank you so much again. You guys rock. I love you. My name's K-Dub. This is CryptoZombie. Until next time, stay crypto. And of course, peace out.